Heard the expression, another day, another dollar. Well, I have a very similar expression. It's something like, another day, I lose $250,000. Yes, that's my expression, guys. Stocks are absolutely horrible out there. I want to talk about why this is going on, what's going on now, all that fun stuff, let's call it that, on what's going on in the market here today. So, NASDAQ down another 1.6% here today, S&P 500 down over 1%. The Russell outperforming a little bit, but still doing horrible, down about 1% as well. Dow Jones down 300 points. VIX spiking. What is going on here? Okay. First thing I want to start out with here is looking at the NASDAQ. So basically, I was looking at the past year of the NASDAQ. The lowest point we could find for a closing price for the NASDAQ in the past year was March 4th, 2021. And the NASDAQ closed that day at about 12.9. Okay. Here's the deal. We get one or two more rough days in the NASDAQ, we're going to break through essentially the lowest point we've been at in the past entire year for the NASDAQ. That's how rough it's gotten out there recently. I mean, NASDAQ's just been in a kind of a vicious downtrend. The Russell has come back a bit, but another few days like this for the Russell, and then we'll be back down to new 52-week lows. So this one closed at its lowest point in late January when things got really rough for the Russell. It was January 26th. The Russell ended up closing that day at 1931. So, I mean, literally, you get like 3 or 4 more trading days like this, and all of a sudden you're back down to where you were, at the lows essentially. And that's how bad it's gotten out there. NASDAQ, for instance, year to date is down almost 14%. I remind you guys, we're not even, we haven't even been through 2 full months yet in this year. That's just crazy to think about. Almost a 14% downward move, and we're not even 2 months into the year. Like I said, like this doesn't just usually happen in the stock market. Like this is an abnormal situation. You don't usually start out a year with the NASDAQ down almost 14%, 16% plus down in the past 3 months for the NASDAQ down. Now, I went on the Hungry Bowl, and I'll be honest, if I see red everywhere on the Hungry Bowl, I start getting scared to even look at my watch list. I'm like, if I see the Dow red, NASDAQ red, S&P red, Russell red, Ethereum, Bitcoin, ADA, and gold red, I'm like, oh boy, this is going to be scary to look at this watch list. And oh, was it scary. Let's go ahead and look at this watch list here. Oh, where's the pain? It's everywhere. Look at Fubo TV, down another 10+% here today. Palantir, down 8%. Palantir's $10 a share for Palantir. I mean, where's the bottom for Palantir? 9, 7, 5? You know what I mean? Like, it's getting so insane now that there's just like, you could throw out any price in this market, and the market will just believe it. It's like, oh, it's going to 7, it's going to 5. It's just like, that's the sort of market we're in right now, where it literally doesn't matter. It's just like, there's nothing you throw in it right now. Teladoc, another one of those stocks. This one's down over 7% here today. Just massive pain there. Celsius Holdings down over 7%. SoFi down over 7%. Lemonade down over 7%. Beyond Meat down 6.8% today. Square just broke through 100. I think this is the most interesting stock I was watching today, because Square kind of had a stake in the sand at $100, and that just got broken essentially today. Down 6% Square there. Smile Direct Club down 5%. Alibaba down over 5% here today. Oatly down 5% here today. Avant down 4.7%. The Hood down over 4%, back to $11 for the Hood. Tesla also down about 4% today. Sam down 3.8%. It's a drinking company. I mean, in this sort of market, they should do well, right? We're all going to need to be drinking soon. Stitch Fix, 12 for Stitch Fix? My gosh. Okay. Wow. These are the sorts of prices we haven't seen on stocks since the March of 2020 stock market crash. Like, you haven't seen these sorts of prices since then, essentially in that March and April timeframe. This is extraordinary. It's nothing short of extraordinary. GoodRx, down to $25 here today, 3.7%. Gosh, man, look at Honest. $5.50? Come on. Give me a break, man. Corsair Gaming 22, The Planet 280. I mean, the devastation is just everywhere in this market. It doesn't matter what you are. It doesn't matter if you're profitable, if you're high P, if you're no P. I mean, everything's just getting absolutely devastated in this sort of market. And the ones that have been getting hit the hardest look like they continue to get hit the hardest. It's vicious out there, right? I can tell you what. I don't know what all this talk is about inflation. Personally, I feel deflation, okay? I mean, last 3 or 4 months, I'm down 7 figures. I feel a little deflated, if anything. I'm not feeling too good. I'm not spending any money out there right now. I can tell you that much. I'm feeling deflation. That's what I'm feeling out there. So, hey, if they wanted to cause deflation, just crash the stock market and then crash the real estate market after, and then, crash the crypto market while you're at it. And believe me, we won't be feeling so much inflation. That will just kind of suck up all the money. We'll be all feeling deflation really dang quick out there. So, like I said, Square is the most interesting stock, I think, today to pay attention to, okay? And the reason is because it broke through that $100 level, which had been holding strong. Like Donkey Kong, well, not so much anymore. And here today, it's got all the way down to 96.83. Look at Square stock. So once again, Square has their traditional business, which a ton of restaurants and coffee shops and retail stores use Square's traditional business model. But they also own what's called Cash App, and they have other businesses as well. But Cash App is their other main thing, right? Like if you're investing in Square, you're investing for the traditional business model usually, and you're investing for Cash App. Cash App is the number one finance app pretty much in the world, but certainly in the United States, right? In this company, 3 months is down over 56%. 1 year, 64.7%. I mean, that's a crazy fall for Square stock. And this is another one of those guys where you try to find a bottom here, and it's like, where's the bottom for Square? Now that it's broken through that 100, before it was consistently kind of bouncing off of like 100, 102, 105, 110. So you say, well, it's somewhere in that level. Well, now that it just broke through that, even a lot of technical traders are going to say, I don't know where the bottom's at for Square, whether you're technical or you're fundamental. Where's the bottom for this? Is it 50? Is it 75? Is it here today at 96? There's really no telling in this sort of market right now. The ARK fund here, just hit a new 52-week low, okay? New 52-week low for ARK here, right? 63.99 was hit for the day. The previous low was around 67 for ARK. And Cathie Wood this comes a day after Cathie Wood went on CNBC. Obviously, I did a video of it as well. But Cathie Wood went on CNBC, defended ARK, defended all her stocks, all those sorts of things. And even with that positivity vibes that Cathie Wood puts out there, it doesn't matter. It doesn't matter what sort of vibes you put out in the market right now. If the market wants to go down and all these hedge fund managers want to continue to sell and put selling pressure, it's just, it's the market we're in right now. And it doesn't matter what you say positive. I think the only thing that could maybe switch is if Warren Buffett came out and said something positive. Maybe if he did it, then maybe we'd have a chance in this market. But it's nasty, right? Look at PayPal here today. Busted through another 52-week low. Where's the flippin' flapjack and bottom for PayPal? It's just insane. This stock is now down 46% in 3 months. PayPal is like a legit great business, a legit great cash flow machine, has a beautiful future in front of it. Nothing matters in this sort of market right now. The 1 year for PayPal is down almost 64%. And, this is just one. It's not like it's some super high valuation name where it's like, wow, look at that forward P, it's at 600. It's not like that stock at all. And so where's the bottom for PayPal? I don't even know. It's all I know is this is literally ridiculous. The fact that PayPal today is trading at $103 is stupid. That's all I can say. It's just ridiculous. But in this sort of market, you can't even say, well, today's the bottom. Although it's a stupid price to be trading at 103, you can't say that's the bottom, because in this sort of market, it doesn't care what you think or what you believe or valuations. None of that matters in this sort of market. Could PayPal go to 75? Sure. In this sort of market, anything's possible. I mean, every stock's going to go to $1, I guess, by the end of this year. It's insane, right? Look at Meta. Can't find a bottom either. Hit another 52-week low here today, right? And that's actually a multi-year low for Meta here, right? Same thing with PayPal's actually had a multi-year low as well. Multi-year low. It's insane. 205, the stock hit today. 3 months, the stock's down over 40% for, generally speaking, one of the safer stocks in the stock market. And this one doesn't even have a big short position. So it's not like, well, a bunch of shorts are short in the stock, so maybe they're doing something funny here. No, that's not this sort of stock at all. This is just like Wall Street continuing, which, keep in mind, Meta's one of the biggest holdings for Wall Street. It's up there, right? So if they're just decide to continue to put selling pressure and they're not buying, clearly, in any mass, right? And it just continues to be more selling pressure on the stock than actual buying pressure. People excited about the stock. It just continues to push the price down day after day after day. Meta, the forward P on Meta. I mean, look at the PE on Meta. Meta's trading at a 14 PE. Never mind the forward P, but it's at 14 P ratio, under 15 now, okay? I mean, when you think about the growth this company has over the next 5-10 years, it's crazy. Crazy to think that this stock could be trading at a 15 P ratio or under a 15 P ratio. But who's to say it can't go to a 12 or 10 or 7? You know, in this sort of market, anything's possible. It's ridiculous, okay? You look at Amazing's on here today. This one looks like it's been okay compared to the other ones, right? Only down 17.8% in the last 3 months, which is, by the way, it's still a lot, okay? But keep in mind, Amazon today is almost $200 a share, below what it was on July 5th of 2020. Here we are in February of 2022. And this stock has gone down in that amount of time. And you think about all the money that's been pumped in the system. You think about the amazing numbers Amazon's reported. You think about all the growth Amazon's had over that period of time. You think about how much better of a place the entire company's in now than it was back then. But what does all that matter in this sort of market? It doesn't matter in this sort of market. And it's just like, where's Amazon bottom? Beyond Meat. This is an extraordinary one. This is one I was watching here today, right? So this one broke through another 52-week low, right? And for this one, almost, getting close to an all-time low or somewhere around there roughly, right? And so when it comes to Beyond Meat, 3 months is down 33%. 1 year is down 67%. And this is a company that's going to have a great year in 22 as far as the actual fundamentals underlying in Beyond Meat's business model. They're going to have a great year, literally a great year. Like they're going to have, an acceleration of revenue growth, which is one of the most exciting things you can ever get in a stock. When you can see a reacceleration of growth, where you start growing more now than you were in the previous year, it's a very rare thing you see in public companies, but Beyond Meat's going to see that. But what does it matter in this sort of market? If they want to continue to sell the stock and send it to new 52-week low, where's the bottom for Beyond Meat? And it's not a profitable company right now. So, it doesn't matter if you're profitable or non-profitable in this market. We see that obviously playing out with Meta, with PayPal and other stocks. It's like they don't care. But I can tell you when you're not profitable, it just adds insult to injury essentially. And this is a company that's going to have a great fundamental year in their business model. And probably the next several years of great fundamentals. But none of that matters for Beyond Meat right now. It's just nasty. Now, I showed you ARK earlier. We know what's going on with Tesla, but I want to, of Cathie Wood stocks, I want to see what her other top 3 positions are doing and how much these stocks are down. It's nothing short of extraordinary, okay? Look at this, Teladoc. So Teladoc just busted through. Guess what? Another 52-week low and now a multi-year low for the stock. It's $65 here today. Past 3 months, it's down 44%. The 1 year, 77.7%. That's a sign I should probably buy. All those sevens lined up in a row, it's a sign, okay? But in all seriousness, 1 year down 77.7%, that's crazy. I mean, absolutely crazy how much the stock has absolutely fallen. And there's another one of those that you could have made a strong argument that, this selling at 100 was silly, and 125 was silly, and 90 was silly. But here it is at 65, and who's to say it's not going to 55 next, and 50. In this sort of market, if that's what they want to do, that's what they're going to make happen, essentially. And Cathie Wood can't save this stock price, at least not in the short term. And, it's crazy. I mean, look at Roku. This is another one that's their 3rd biggest position for the ARK fund, right? Roku, guess what? Just busted through a new 52-week low, multi-year low. Look at the 52-week range. This stock was on almost $500 in the last 52 weeks. It's at 102 today. The 1 year in the stock's down over 77%. The 3 month in the stock is down over 54%. For a stock like Roku right now, in this sort of market, they don't want it. It's at a 53 P ratio. I don't know if they would be happy if the stock was at a 30 P ratio. That's the thing with this market. It's like, no one's willing to pay for anything. Clearly, that's how you see it in the pricing action. By the way, look at Roku down 26% today. They're not willing to pay for anything. It doesn't matter what it is. They're not willing to pay a dime for a penny, right now. Wait, did that make any sense? I meant to say they're not willing to pay a penny for a dime, okay? I switched it up right there. But Wall Street, they're not willing to pay for anything. That's the moral of the story. Zoom stock, her 4th biggest position here for the ARK fund. Another massive low. 124 it hits here today. This one's down about 70% in the past year for Zoom. And, about 50% for the past 3 months. Is the nastiest market I've ever seen, and this is the closest thing. When you see these type of drops, this is This is like what happened in the tech bubble. That's exactly what's happening. This is what happened in the tech bubble. But the big difference is these companies actually, and believe me, these aren't my favorite stocks. Zoom, Roku, stocks like that, not my favorite stocks. But I can tell you, Zoom's got an actual business model there, okay? And they actually make some pretty good money. Roku's got an actual business model, and they make some pretty good money. And so these are actual companies that actually have real revenues, real profits, and have real, long-term stories and short-term stories. And they get treated like they're, some pie in the sky, thing, like stocks were treated at in the tech bubble, and let's send it down 70+%. That's the sort of market we're in right now. It's out of control. This market's completely out of control. I feel like Gordon Ramsay right now. Oh, you idiots, you overcooked the steak. What are you thinking, okay? Do you not know how to cook the steak? And I feel like that's Wall Street right now, where Wall Street doesn't know how to my gosh, okay, they're either way overcooking the steak or they're way undercooking the steak. And what I mean by this essentially is they way overvalued a ton of stocks last year. Now they're way undervaluing a ton of stocks now. It's like, imagine this was a person that was cooking your steak, right? They're either going to give it to you burnt, completely burnt to a crisp, or you get it like where it's still like cold in the middle and you're like, is this like, did this even go on the grill or what happened here? This is essentially what Wall Street does. They either massively overvalue these stocks or massively undervalue these stocks now. And it's like, what are you guys doing? Can we just have like a happy medium? Like, can we have like a steak that's cooked like maybe medium, maybe a medium rare? No, they don't know how to do that. All they know how to do is burn it to a crisp or essentially give it to you raw. And that's it. There's no in between with them. And that's just the sort of market we're in right now. It's ridiculous. Okay. It's ridiculous. So back to the market and why things are falling so much. And there's a few reasons I have out there. And then Wall Street doesn't know how to value a thumbnail from a toenail, essentially. And so what is going on here? Okay. So first off, the market's closed on Monday. Okay. George Washington, a man who actually knew how to buy the dip, knew how to value stocks properly. Okay. Essentially, the market's closed on Monday. And so why does this matter in this sort of market? So remember, we're in a very fear-driven market right now. Very fear-driven, right? So if all of a sudden you talk about a 3-day weekend, a lot of Wall Street saying, okay, 3-day weekend, where's my exit? Because I don't want to hold over a 3-day weekend because the amount of bad news you can get over a 3-day weekend is more than you could get over a 2-day weekend. So they're like, in this sort of market right now that's fear-driven, they're like, I want to get out of this. You got the Russia situation, which, by the way, they came up with a formal name. The mainstream came up with a formal name for the Russia situation now. It's called the Ukraine-Russia border crisis. Okay, that's a proper name for this now. Before, it was just kind of like the situation, right? Now they got a proper name for it. The Ukraine-Russian border crisis. So with this situation, a developing situation, 72 hours could be the whole difference between something happening there or not happening, right? And a lot of Wall Street, because they trade in and out of stocks, they're not really investors. They're traders in and out of these positions, right? A lot of them say, hey, you know what? If something happens here over the weekend, on Tuesday when the market opens, we could open down huge. And so a lot of folks would just, that are trading on Wall Street, just look at this and like, I don't want to hold over a 3-day weekend with this whole situation in the air right now. No, I'm good. I'll go to the sideline in this situation and I'll buy back in on Tuesday. And plus, in this sort of downtrending market, the way they look at it is like, what are the chances the market's up huge Tuesday? Seriously. What do we have to go off of? Everything hits a new 52-week low every day. Everything hits a new multi-year low every day, every other day right now. What do we have that's going to be suddenly shockingly great news on Tuesday? In this sort of market that's fear-driven right now, they're like, I'll just buy back in Tuesday. There's no reason for me to close over, to keep this over the weekend, essentially, right? A 3-day weekend. No, good news is we let Russia win some things. So Russia is happy right now. So maybe they don't want to invade Ukraine right now. Maybe they're in a good mood for a little bit. So yeah, we'll see what happens with that. All right. Margin. So you got to understand. There's things going on underlying with margin right now, and this matters for the market. So right now in this sort of market, margin had gone really, really crazy last year, right? It went really, really crazy, like to record levels, right? Well, now, because the market is getting so rough and so many stocks are getting absolutely devastated, right? New 52-week lows after new all-time lows. What's happening essentially is not only are folks selling stocks potentially because of all the fear in the market, but they're selling because they can get margin calls, right? And also a lot of people that maybe are using margin are not very enthusiastic for using margin right now because they're like, shoot, man, could I get margin calls? The market just keeps going down, right? So the January 2022 numbers were the lowest in terms of margin being used out there, right? The lowest we've seen since March of 2021. Now, when the February numbers come out, I think we're going to be even much lower than this. And this is essentially, investors taking out debt to buy stocks, essentially, right? Which is, usually you want to, if you, usually for most people, margin's not even a consideration because you're not experienced enough, right? But for the folks that do usually use margin, you usually want to use it more when stocks are crashing rather than when stocks are going up to record highs. So, for instance, you could have used margin in January of 2021. That would have been a really, really bad idea. Imagine your margin into Teladoc at 300, into Zoom at 300 or 400 or whatever Zoom was, and Roku at 400 plus. You got margin called a long time ago and you got your accounts completely destroyed. So, for most folks, margin's not appropriate, but if somebody is experienced, like usually you want to use that in a actual crash and you want to even deploy really, really slowly in that sort of situation, or you can end up in a situation where you get massive margin calls in a vicious market. Now, in my opinion, when we see the February numbers, by the end of February, we're going to see numbers that are somewhere in line with where we were in 2020, in my opinion. We'll be somewhere in the 500 to 700 range, 500 on the low end, 700 on the high end. And so, nonetheless, this was a big worry in the market about margin debt and all the money that had been margined. Well, we're blowing through that right now. And so, like I said, the numbers are coming down because people are getting margin calls left and right, and because people are just not very enthusiastic about using margin. And some folks are getting themselves in a situation where they're looking at all these stocks drop and they're like, man, I think I'll just sell ... stock because I don't want to get a margin call in this situation. And so that ends up happening. And what ends up happening is that margin calls breed more margin calls, right? And so that's a factor we have going on in the stock market right now that you can't deny is going on. And as long as this market is going to stay really, really rough, margin will continue to decline. And that's what happens every single time. Now, when the market starts to come back on the other side and flips, don't think margin's necessarily going to go boom immediately, because people will be very shy about using margin when the market starts to really, really turn in a real way, right? People are going to be like, I don't know. So it could take several months or maybe even several quarters before people really start saying, okay, I think we're out of the woods now. I can start margining again, essentially, okay? So that's playing out, right? And then you have the call option situation playing out. So when you have folks that are buying call options, right, and making a bunch of money on those because stocks are going up, well, that can, make stocks go up even more, because essentially what happens is people that own the call option end up buying the underlying shares. And sometimes they end up just holding those underlying shares. Sometimes they sell them off to another shareholder, but it puts another buyer in the market, right? And so that's a great thing with call options. Well, in this sort of market, obviously, stocks are not going up, right? Stocks are going down. So if you have call options right now that are expiring, more than likely, you're essentially in a situation where your options are expiring worthless, right? And so there's no need to acquire the underlying shares there because your options are expiring worthless. And so this is something we have playing out. By the way, if you haven't subscribed to the channel, make sure you're subscribed. And also, if Smash Gang, I appreciate you guys as always. And if you want our daily newsletter for Hungry Bull, check out pinned comment down there. The Daily Bull, we just started that this week, and it's pretty darn awesome, okay? So the call option situation is one that's, it's just creating less buying activity in the market and less exciting things going on in the market right now. When the market's going up and all these stocks are going up, man, people are they're buying calls, they're making money, hand over fist, and they're in a situation where they're just continue to buy those underlying shares as those options expire, right? Now, in terms of me, it hurts me on a day like today not to buy, because I'm looking at stocks, seeing stocks deals everywhere. I can't buy today, and the reason being is I gotta wait. Honest has still got to report earnings, and Tattoo Chef still has to report earnings. I don't know what's going to happen in this sort of market. What if they send Tattoo Chef back down to 52-week low at 10? What if they send Honest to a new all-time low? It's right around its all-time low right now. What if they send that down further? I got to have some capital ready just in case. Planet still has to report. What if they send Planet back down to a 52-week low? I got to be ready just in case these babies tank. I don't think they are, but in case they are, I got to be ready for it. I don't want to be in a situation where I watch one of those stocks or all those stocks tank, and I'm like, I already deployed all my money. But it hurts me to see PayPal at the prices it is today, Palantir at the prices today, and be like, I really got to wait this out. So I honestly can't wait till these earnings finally come out, and I can see what happens with those moves there, and either deploy money accordingly or go and deploy money in some of these other stocks that I see that, there's so many deals in this market right now, I don't even know where to start. I could make a list of probably 100 stocks that are a great deal right now. But the fact that they're a great deal doesn't mean they can't go down more in the short term, because that's the sort of market we're in right now, guys. So that's what's going on in this market. Hope you enjoyed this. As always, if you want 5 free stocks valued up to $3,500 each, check out Pin Comment down there for Moomoo, the professional trading platform. Even doing a deal right now where you get a free TTCF share with a $100 deposit. That will be Pin Comment down there. Also, check out our Hungry Bull newsletter if you want that delivered to your inbox every weekday. Much love as always, and have a great day.